The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the May 20th wonderful Wednesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to a wonderful start of your day. Let's make sure that you and I do everything we can to get every ounce of energy out of our wonderful Wednesday. Let's have an extraordinary day. And, of course, let's always remember what's talked about is a dream. What's envisioned? Well, darn right exciting. Of course, what's planned becomes possible, but what is scheduled is absolutely real. And I want to really thank you for scheduling your time with me this morning. I'm honored by your presence here, and I'm here to serve you. Feel free to pick up that phone and dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. Remember, if you've got a question, millions of others, thousands of others, all kinds of other people have got that exact same question. So on behalf of them, go ahead and call in and make it a random act of kindness, because that is the way to kickstart your wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got a mixed market out here. The Dow's up 6 points. The S&P is back a point. The Composite's off 7. The Russell's down a point and a half. The DAX is off 13. The FTSE's up a couple of points. Gold's up $4. Silver's up 16 pennies. Light sweet crude up about 80 cents right now. Leading the charge the upside, you got Dicom Industries up $8 and 18%. Sarepta Therapeutics up 40% this morning. That's up $6. Regeneron Pharmaceuticals up $6. Shake Shack up $5. Time Warner up $5, up 3.5%. To the downside, Etsy down about 22% this morning, 22%, and falling like a rock. Probably going to continue trading at $16. I figure it's good for at least another $8 or so to the downside. I got no idea where that comes from, so don't go ahead and try to short that stock. But I'm not to bind into Etsy's move, and that was really pushing some paper out there. In any event, you've got the Guggenheim Solar ETF. Its ticker symbol is TAN. It's getting a little sunburn this morning. It's off $4, down 8.5%. Price line off to 274. We know that's just trading in a consolidation range. United Airlines off about 6% this morning. Spirit Airlines saved, that's off 5%. The airlines getting hit. Alaska Air Group down 4.5%. Love Southwest Airlines down 7%. So we'll go take a look at that sector as well and see what is going on there. But first, let's go start off by taking a look at the ETF structure for the indices out here. Let's go take a look at the QQQ ETF series. What did it do yesterday? Hey, got in and tested that April 27th high swing point out there. That had 31 million shares, and I think my glasses are fogged up because it says there were only 14 million shares yesterday. That traded hand yesterday was terrific Tuesday. Was that the beginning was yesterday a holiday and I just didn't get the memo on it? It sure traded like that, 14 million shares. You've got a rejection of a swing point with price and volume. What does that say? If you can't bust them up, maybe it says it's going to go ahead and bust them to the downside. That would then go ahead and take the QQQ ETF series into that 106.11 area, into that swing point from May the 6th. If we go take a look at the Russell 2000, the IWM, that's off 23 cents as we speak this morning. First potential bearish reversal signal after failing to be able to bust out the lows, because it did it. It tried to do it with volume, and it finally tried with light volume on May 7th. Couldn't bust them down. Tries to bust them to the upside. If, in fact, today is not a reversal, that says price will move up to about 125.66, maybe even or 125.92 to the 127.13 area, and that is the Russell 2000, the IWM. Let's take a look at the SPYs out here. The SPY off 17 cents, 13 million shares as we speak right now. What is it doing? Hey, the key number inside of the SPY is going to be 212.24. That's the February 25th swing point. That's the B point of an A to B equals CD to the upside. That at this stage has a confirmed A to B equals CD to the upside because it was taken out with volume. There were 73 million shares there. It was taken out with 76 and then 74 million shares on May 18th. Yesterday, strived to move higher with 72 million shares, so volume not too shabby yesterday either. Today, just a sideways move. Nothing else inside of the SPY. Moved below 212.24 with light volume. Well, then at that stage, we'd have a pullback, right? So you actually, at this stage of the game, you need to see the SPYs break with volume to the downside out there to get you back in the 207 type area. In the case of the Dow, diamonds, Lucy in the sky with diamonds. What did the diamonds do yesterday? Closed above the March 2nd swing point, setting up a potential A to B equals C to the upside. That swing only had 3.2 million shares. What did you do yesterday? 2.7 million shares. Again, traders taking the day off. That's buyers, that's sellers out there. Nonetheless, you're still above that swing point. You're above the swing point, says you can go fulfill that 1-to-1 A to B equals CD price objective. So far this morning, we've seen price pull back, test that area, and bounce off that line. So, you know, what what do we want to say here? The preponderance of evidence at this stage of the game, it's got to go to the bulls out there. So that takes care of the 4 index ETFs. If we go check out the summation index for the New York Stock Exchange, it's below 0. That's at 10:14 a.m. It doesn't mean diddly until 3:59 and 59 seconds have gone by. If we do see a close today below that 0 line out there, that will be a message that the move higher has maybe run its course out there. In the case of the NASDAQ Composite, price oscillator still above the 0 line, so sellers are still in control of that market as well as the Dow. But the Dow is now starting to give us a descending tops price out there. That is a nasty pattern for those of you that are bulls inside of the Dow, because what I can tell you is that when you get a descending price tops pattern and price moves higher, descending price tops in the price oscillator, and price moves higher above a recent where that price oscillator began, it never ends well out there. Now, what does never ending well actually mean when we take a look at the Dow out here? You always got to go back to the swing points as your first target of anything. If this pattern were to continue out here, and then we see a price move below the price oscillator today, tomorrow, the next day, today's Wednesday, that'd be Thursday, Friday, or Tuesday, right? That would lead to at least a move back, I'd have to say, into the bottom of the consolidation area inside the Dow around 17.6. Now, what Stevie thinks is the following. If, in fact, we actually see this pattern play out, you can forget about 17.6. I say, because on 17.6 and we're at 18.3, that would be 700 points. That's not really the kind of scary low that I expect that we will see if these patterns play out. Do they have to play out? Absolutely not. But are there enough indications that they may play out at this stage of the game? The answer is yes. And I'd say more likely the run takes you back into the lows back here in February 2015, right around the 17,112. But we can take things one moment at a time out here. Again, this whole oscillator stuff that we're looking at, it really doesn't mean a hill of beans, as I say, not until the end of the trading session. But still, you got two patterns that are saying look out for the rug out there. And that's what's going on there. The VIX index, let's go take a look at it. It's trading at 1307. You know, not that big of a deal out here. If it gets to 1391 out there, that'll become a larger deal above 1391. An even larger deal when you take a look at the VIX index. So we go look at currency pairs out here. We go see what's going on. We're looking really at the liquidity gauges of the market. The VIX is saying there's liquidity. The euro yen is saying not so fast out here. Not doing much in the way of today's action out here, but it is saying not so fast. If we look at the euro versus the U.S. dollar, that is trading a little bit lower here this morning. It's trading right at the 0.382 retracement level. If this was the only retracement down and it begins to move higher and takes out that descending price channel and forms an A to B equals CD to the upside, it'll be a supersize it A to B equals CD pattern to the upside. I don't think that is going to happen. There are too many signals out here that say we're going to move down to $1.08 or maybe even $1.07 or maybe even $1.05. You say, what are those signals? Well, if we take a look at this, we saw price move higher. It did it with less relative strength. Here's what that pattern looks like. Let me put the red line out here. I like those red lines in the sand. Here's that pattern. where price moves higher. It does it on less relative strength. That's what the pattern down here is showing. When we take a look at that 14-period RSI, we get a nice little bearish engulfing candle. That was on May 18th. Yesterday, we get below the descending price channel, and we do with conviction, confirming that prior pattern out here. These usually end in larger retracements than just a 0.382. Doesn't mean that it has to, but they typically do, and that's what my expectation is. What will that do? That's going to go ahead and put strength into the U.S. dollar index out there. But, of course, there's other currency pairs that are going to affect that index as well. You got to see what's going on inside the Japanese yen. So let's go take a look at what's going on inside the Japanese yen. In the case of the Japanese yen, this is moving higher. This is getting weaker. The U.S. dollar index is therefore getting stronger out here. So it's putting a little bit of strength inside here. In the case of the Japanese yen, she's now trading into the swing point from March the 10th. If, in fact, the Japanese yen can take out that swing point high, 122.02, then it will set up an A to B equals CD to the upside. That will be moving higher. In this case here, in this currency pair, as we take a look at it, it's really the Japanese yen that is the base currency that we're looking at, and that says that it could move up into the 124.50 level. If, in fact, that's the pattern that plays out, and we're not there yet, but if it does play out that way, this will get weaker. The U.S. dollar index will get stronger. If the euro is also pulling back below the 0.382 retracement level, it will get stronger as well. Then you got 2 of the 6. Of course, you only really have to pay attention to 4 of the currency pairs. We'll go take a look at the Great British Pound when we get back from this break. We got flat markets. Everybody is safe out there. We'll be right back. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Flat markets across the board out here. If we go take a look at what's going on intraday, we're taking a look at the first 30 minutes of trading out there, oftentimes also known as your opening range with regard to the range of the market. Now, we're looking at the S&P 500 out here. And so the top of that range being the 21.2650 level, the bottom being 21.19 and a quarter. What we have seen is prices really just, so we haven't had a breakout in price in either direction out here. A breakout above 21.2650. We start taking a look at patterns to the upside as well as below 21.19 and a quarter. We'd be taking a look at patterns to the downside. We look at swing points and things of that sort. What we have seen thus far, just in the first hour of trading, almost hour of trading, is we've seen a 0.786 retracement of that move of that opening range, getting up to the 21.25 level, right on the button out here. Little doji candle that had formed during that last that's a 5-minute time frame that we're looking at out here. Any move above 21.25, and we will see a move up to test the top of that opening range out there. Oh, I didn't mean to delete that, but I did. So be it. I'll just have to put that line back in there. We'll do that right now so I don't have to forget about that. That's what's going on just simply inside the S&P futures contract. We were talking currencies before we went to the break. We looked at the euro. We looked at the Japanese yen. If we go take a look at the pound as well, that's up just slightly. Now, the pound here has an A to B equals CD pattern to the upside, and that would take you into the $1.60 area. That pattern is still in play out here. If, in fact, we see this currency pair move higher, that will actually go ahead and weaken the Great British Pound, and that will go ahead and that will strengthen the Great British Pound. That will go ahead and weaken the U.S. dollar index out here. But at this stage, just an inside bar says the Great British Pound really wants to move back to about $1.53, maybe even $1.50 out there. That's what's going on with those four currency pairs, because we did take a look at the euro, Japanese yen. Let's take a look at gold and silver. Let's cover that for you. Gold, the case of gold here, no bullish reversal signal or anything along those lines on the daily time frame chart out here. The price for gold, that's the left-hand side of my screen out here that you want to see it hold if you're a bull, is $11.9920. If it does not hold that area, you can see it move down into about the $11.70-ish price range out here. In the case of the GDX, that's the right-hand side of my screen. Again, inside day out here says that the prior trend continues, and that says that you'd see a test of the 1947, maybe 1928 area. In the case of the GDX, come on, do this for me. Looks like a nice little rising price channel as well that has formed out here. Let's go. I grabbed the wrong thing. Did not mean to do that. I meant to grab this tool. Let's see if we can do it this time. So here is the rising price channel. Come on. There we go. Down to about right there. There's really that little rising price channel inside of the GDX. Now let's pull this back here, and let's make that a different color because that's going to confuse me. If it's going to confuse me, it's going to confuse everybody. What color would you like to use here? Hey, let's look at that light blue. That's a pretty color. Let's go ahead and see. Yeah, there we go. There's the light blue color. That's going to be your rising price channel out here versus the green that we could have used out here. I don't know if I should have used that. Yeah, we'll just go. That's the Steve Picasso look to technical analysis and charting out here. So this says here the GDX likely to fall back to test the bottom of that rising price channel. It's also the market profile, TAS market profile low at 1947. Looks like that is the move that is underway inside of the gold market vectors gold miners ETF. Said beautifully because it was said nice and slow out there. That's what's going on with it. Light sweet crude, if we take a look at light sweet crude up 82 cents right now, it's just got an inside day as well. Price did manage to pull back to a support level of its TAS market profile low at the 57.94 area. Any crack or break below this area, which I think is most likely what we're going to see because the trend to the upside has been broken. You're probably looking at about $53.63 to the downside inside of light sweet crude. Let's go take a look at some of these equities here that are moving and grooving on fire. We've got Chipotle Mexican Grill. See, oh, wait, I take that back. I have to look at love because I want to give a lot of love to all of you out there. Southwest Airlines, that was the request to go take a look at Southwest Airlines. So let's pull that up on our screen because the airlines are getting a bit hammered out here. And that's not because they were at the bar last night. It's because we're seeing a sell-off with volume. In the case of love, Southwest Airlines, 8.4 million shares to the downside. I'm not sure who started the run, but here's what we know about love. We're going to wait to give you more love when we get back from this break right here. This is Steve Rhodes with TFNN. I'll be right back, folks.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 7. S&P is flat. Composites off 4. Russell is flat out there. Before we went to break, we were beginning to take a look at Southwest Airlines. We've got all the airlines getting hit here this morning. American Airlines is down 6%. Southwest down almost 7%. Alaska Airlines down 4%. Spirit is off 6% out here. So a number of it looks like all these in unison moving to the downside. Not sure what sparked the sell-off out here, but let's go take a look at it. Now, in the case specifically of Southwest Airlines, right now it's trading into its most recent swing point that I'm looking at. It takes us back to January 16, 2015. So, in essence, all of the gains inside of its moves out here for 2015 are basically gone, vanished, boom. Now, the thing is that swing point has got 9.1 million shares, and you've done basically 9 million shares with only an hour and 5 minutes worth of trading. So this thing is pulling back with volume. What does that say? Well, it says that it likely has further to go. Now, what was pointed out by one of our debtors out here was that price has pulled back to the 200-day exponential moving average, and it has done more than that. It's actually trading just a tad below that. 38.66 is the number. You're trading at 38.13. Now, in the case of Love, and the reason why this individual was looking at that 200-day exponential moving average, the day's not over, thinking that it could act as good support, is because it has been support ever since November 19th. 2012. But today is a close below that level. So you close below that. We'll go take a look at those other airlines as well. And, that could be a nasty thing out there. But what we can really say is that if we just take a look at retracements now, because retracements are, one tool to measure where projected moves are. You've cut through the 0.382 retracement level with a wide-ranging bar. That's today's bar. 35.57 is your next move down, and then 32.42, and then 100% move of a move out there. I don't know which of those, if any, are what Southwest Airlines will do, but more likely than not, any close below this 38.26, and that's what you're looking at, is one of those levels to the downside out there. Strange things going on with the system this morning. I had that yesterday, did we not? We had to use a whole different, the backup charts. Not backup charts, just charts that I use as well. Let's take a look at some of these other airlines, see what they're doing. Let's take a look at Spirit, SAVE, off 5% this morning. It's got volume behind its move of 860,000 shares. This thing is back below support levels, certainly well below its 200 day exponential moving average. That's a red line going across my screen while it's trying to compute. A little slow. So it looks like Spirit is probably headed to the $52-ish range out here right now, trading at 63 bucks. Let's take a look at, there we go. Work with me. Let's take a look at UAL, United Airlines out here. That's down about $3.50 with about almost 6% as well. United Airlines. So they're all doing really the same thing. So this could be in the case of United Airlines, you actually can see a fairly decent descending price channel that has now formed out here. At least it looks like it has. And the bottom of the channel, pretty much looks like this. So the airline sector looks like that is now done for the time being. If we do see a break above that rising, descending price channel, then you can say, okay, that break is over out there. So that's inside of United Airlines. So we took at United, we took a look at Spirit, we looked at, we didn't take a look at American Airlines. Let's go take a look at AAL out there just to finish this off. Again, all below the 200-day exponential moving average. In the case of American Airlines actually, so this is kind of cool when you take a look at the airline sector itself. American Airlines had a little sign of strength out here on the trading day of November 28th. It's only 21 million shares to the upside. Decent volume out there for it. This has a high volume high out on March the 20th with 137 million shares. At some point in time, American Airlines ought to be back up to that level. But today is not that day, and you're coming back into, so the areas to be watching inside of UAL are going to be now 42.78 to 45.75, and a break of 42.78 says you probably run all the way back to the $36 area. So that is what's going on inside of the airline sector as of 10:39 a.m. Quick peek over at that opening range out here. This is the 5-minute chart. I thought there was a little doji candle out there, but I'm thinking the weird data feed. In any event, it looks like the ES Mini going to go make a run for that 21.26 area, 21.2650 to be exact. We'll see if it can take that out. If it can't take that out, your question should be, well, where will price head to? So that's an excellent question. Let's go take a look at it. Take out 21.2650, and you're likely to go make a run for, I got the wrong chart out here. I can't look at the silver chart and then tell you where the ES Mini is headed to. Now, if I did that, that would be special, as the church lady might say. So any break above 21.26, you're probably looking at the resistance of around, well, we're going to say we're going to have to say the swing point high, 29.29 to about the 21.34-ish type area. That's what you should be looking at. Back to the, let's see, summation index. Okay, everything is back above the zero line as we speak right now. Again, doesn't mean anything until the 4 o'clock time frame. Let's take a look at some other equities here that are moving. I think I mentioned Chipotle, CMG, down about $5, only 0.7% as we speak right now. What is Chipotle doing? Let me turn this calculation here, which I've got going back on the 200-day exponential moving average. For some reason, it's taken a while. Let me get rid of that. Boom, just like that. Okay. Now, if we take a look at Chipotle, I don't know, I had that box up there for somebody. It's really, I'd have to say, the box looks like, what would we want to take a look at? In the case of Chipotle, what you really want to pay attention to is not that box, but let's take a look at this. Chipotle broke out at 596.90. Really wide-ranging bar out there, and nice volume behind them, move 2.2 million shares. Right now, Chipotle is trading below the support level of its market profiles, and that's a significant one. You don't see a blue line here. See how we got, if we come back here where my cursor's at, got a light blue line, red line, and a green line out here. No light blue line. That means it's right there. The point of control is the exact same price as the support level. That says that was a significant area of support. Chipotle has missed that. It is trading below that. Price can't get back inside there. That says move to 596.90 becomes the target line for CMG. Let's take a look at price line. Of course, if we look at price line, we'll see just traveling in that sideways range between 11.29 and 12.64. Nothing else going on there. If we take a look at, I'm just looking. Puma Biotech, that's jumped into the first place dollar-wise, $9.90, up 5.5% out here. What do we know about Puma Biotech? Puma Biotech was able to break a B point with volume. That was 180, 160, 338,000 shares was broken with. 731. Has not fulfilled that price objective of that 1-to-1 A to B equals CD to the downside. And right now, Puma Biotech just running into its most recent gap down supply level, should find resistance at a price point where they got that open window at 198.84 out there. Volume today so far 174,000 shares versus the downdraft of 3 million shares, a light volume counter trend bounce inside of Puma Biotech. Regeneron Pharmaceuticals, let's go take a look at it. REGN. This is moving higher. Looks like it's up at all-time highs. It's taken out the volume the day from March 20th, which had 1.5 million shares. That high was 495.50. It's been taken out with light volume. 790.711 yesterday was the volume on that pattern. Where is this headed to? Well, in the case of Regeneron Pharmaceuticals, probably best to look at a weekly chart out here. And I don't know. Where is this really headed to? Just, you know, you'd look at a couple of A, B, C, D patterns out here. The most conservative one, let's go with the most conservative one out here. I would say, realistically, the conservative one is going to give us a price objective of somewhere around 545.10. Ticker symbol REGN. What do we want to look at? Just looking at some stuff. Let's go look at, of course, this would be kind of boring, but let's go do it anyways. Let's look at the Apple, ExxonMobil, and maybe some of the ETF structures for the sectors out there. If we take a look at Apple, what's it doing? Here's the weekly chart. Not much. Consolidated up at the highs out here, so it's not as if it really looks that bad, but it's not doing a whole heck of a lot. We know that Apple's got a high volume high out here that has not been tested. At some point in time, 134.54 ought to be tested out there. Volume of 118 million shares out there. The swing itself is being tested. Coming into it with light volume, you had 50 million shares on May 18th. Yesterday was 44 million shares. Nonetheless, that high should be tested. Doesn't have to be tested today, doesn't have to be tested tomorrow, but at some point in time, we ought to see that level get tested inside of Apple. In the case of ExxonMobil, XOM is the ticker symbol. ExxonMobil traded at 87.08 right now. What is it doing out here? Good question. It's really just come back and made a retracement of its most recent move off of the low out here from March 13th into that high from May the 5th out there. It would look like, looks like to me, ExxonMobil ought to make its way down to 85.51, the 0.618 retracement level of that move. If we take a look at also moving out here, we've looked, well, I'm just trying to find something of real interest to you in a market today that's really not doing a whole heck of a lot. What are we doing on the opening range out here? No, haven't hit it just yet. Let's come back. What do we want to look at? Well, let's go take a look at the sectors inside the S&P 500. Let's go look at the XLK. That's trading up 6 pennies out here. Man, my system is just going bonkers today. Bonkers, I say. And when I do that, that's what happens. That's not good. Let's take a look at the XLK. The XLK right now is trading into, I don't know why I've got the bottom of that swing point. We're going to change that to the top of the swing point, which is 43.46 out here. That's what it's trying to do. It's just trading in a sideways range between 41 bucks and 43.50. In essence, 43.46 is the number. You got above it just for one trading session on May 18th. That was with 3.3 million shares versus 6.8. So not enough volume inside of the XLK to push up and over that area. If it does get up and over that area, 43.46, then you could set yourself up for a move to $45 and a penny. The XLF, the financial sector, what is it doing? The financial sector, it's up at 25 bucks out here. It has taken out the swing point from March the 18th, which had 47 million shares. It's been taken out with 16 million and 26 million. So definitely taken out with light volume out there. Nonetheless, and we've also seen a test of the swing point out here. That swing point is from December 29th. Now, that had 17 million shares, and you came into it yesterday with 26. The problem is, December 29th, you know, you're looking at a holiday for sure out there, and so volume would be light. I don't know how you really make a adjustment for that trading day from a volume standpoint. Let's say you don't even have to. Why? Because when you get inside the swing point, even if it's on light volume, which means a close above 24.88, says that's the low, says that the high ought to be tested, 25.14. I suspect that that's what would happen out there inside of the XLF, inside of the financial sector for the S&P 500. If we take a look at the healthcare sector, XLV up 18 cents, 1.5 million shares behind its move. It too is making a run for that swing point at 76.01. It's trading inside the high and low. Well, it's trading with inside the day of that swing point, March 20th. That low was 74.48. You're trading at 75.22. 9.5 million shares. The XLV is up with light volume into that level. You don't get a rejection until you test 76.01 with light volume and then close back below 74.48 out there. Let's take a look at one more sector, please. Johnny, drum roll. All right, that's the energy sector, the XLE, down 17 cents. What is the energy sector doing? It's waiting to figure out what ExxonMobil, Chevron, and Schlumberger are doing. In the case of the XLE, looks like it wants to at least test the 78.97 area. 78.97 may be the test of this high from March 18th, which is at 77.95. That's what's going on inside of the energy sector. Speaking of energy, nope, I'm not running out of energy. Not just yet. I got enough to take us into that 11 o'clock hour where we turn over the energy drink to our man Basil Chapman. Now, it is Wonderful Wednesday. That means we've got Larry Pesavento in the bullpen as well this morning. If we take a look at light sweet crude, trade out at 58.45. What is it doing? Not much. Did test the TAS market profile low out there, but pretty good chance that this is going to make a move lower into the 53.63 range out there. If I covered that twice for you, my apology for doing that. If I take a look at, let's go back here, look at those 120-minute time frame charts out here inside of the ES Mini. Here's our 120-minute time frame chart. We can see we had a break of that descend or that rising price channel, but price right now during this 2-hour session, which by the way does not end until 12 noon, not until Basil's show is over. So right now what we know is we saw a break of that area. Whenever you see a break, you like to see price come in, test, and get back inside. That's what it's doing right now. If it cannot get back inside, that says, something to think about. Maybe that trend that's in place would be kaput, would be done for just a little while out there. This is Steve Rhodes with TFNN. We've got the Dow up 11. The S&P is up 35 cents. Be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 10, S&P is flat. S&P is flat. I say composites flat. The Russell 2000 is flat out there. Maybe that's really the type of trading that we see going into the Fed minute release between at 2 o'clock. So I don't know if it's 2:15. We'll see what kind of action there is in the marketplace. A couple of emails that came in during this hour here. One question was, what's my take on the 30-year Treasury and its message out here? It really hasn't changed since we last took a look at it out here. What the 30-year Treasury has done, we're taking a look at the June contract. It's completed the 1-to-1 A to B equals CD to the downside, or it's come close enough to completing that. You're watching that, looking at that pattern on my screen. We have not seen a bullish reversal signal. Stevie likes to see the sign painters out there, the bulls and bears, the buyers and the sellers actually give us a signal. But there is another signal out here with regard to what the pattern that is in play in the 30-year Treasury. This says that we see a bounce, at least a bounce. Now, I don't know what type of retracement we'll see out of this, but it says that the 30-year Treasury wants to move higher. Now, the reason that I say that is because there's a unique pattern. When price moves higher, now this is not taking a look at a price oscillator. Well, it's a version of an oscillator. It's really the stochastic pattern out here. That's what's on my screen that you're taking a look at. And we see a rising bottoms pattern inside of the 30-year Treasury as we speak right now. Again, no bullish reversal signal. That's one thing that is missing out here. But we do see that rising bottoms pattern out there. If we saw a bullish reversal candle, I would have more conviction behind what it is that I'm looking at. But at this stage of the game, I've seen this pattern over and over again. It's kind of like watching a movie over and over again. No matter how many times you watch My Cousin Vinny, they still get sprung out of jail because of Vinny out there. And if we're taking a look at My Cousin Vinny on the stock charts out here, I'm not sure where that came from, but anytime we have the stochastic make either a rising bottoms while price is making lower lows out there, or we see a declining stochastic move with price moving higher, the movie ends the same way, and there's no reason for me to believe that this movie doesn't end the same way as well. Then there was a question about, hey, is it too late to go take a look at, to go review the Psychology of Trading workshop that I did out there? And the answer is absolutely not. You can email me, steve@tfnn.com, mike@tfnn.com. Any of us will be happy to go ahead and get you set up for that. Now, that was a workshop that I did last week and the week before. Look, folks, the business that you and I are in, we're basically one-man, one-woman armies for the most part. It's up to you and I to make decisions about what it is that these markets are doing, whatever technical tools it is that you use out there, or fundamental tools. There's only one thing that really gets in the way of you being able to make a decision, and you have to be the biggest leader out there, whether it's in trading and investing, whether it's at your home and running your household, whether it's your business out there. It's the same. It's a vanilla. It doesn't matter what it is we're talking about. It's basically running a business, no matter how you take a look at it. And 90% of the time, the only thing that gets in the way of you taking action is yourself. And that means you have to really understand the psychology of trading out there. You see, folks, in life, everything is about some kind of turmoil. It's either turmoil, it's about some type of something that is getting in the way. You're fighting either yourself or you're fighting someone else out there. And you need to really understand what I call a reframe and elevation strategy. And I teach you several of those, and I teach you how to understand what's going on with inside of you. It's a very simple, it's not simple, but it is a very easy way for you to be able to take a look at it. So if you've got interest in that, which you should, because the psychology of trading is all about the psychology of life. And I'll teach you how to reframe and elevate and get out of that crazy 8 pattern and take yourself up to the next level, whatever that is for you. So stay tuned, because we're going up to the next level here at TFNN with our man Basil Chapman. In the on-deck circle, we got Larry Pesavento. It is Wednesday. That means we've got David White from 2 to 3 and the Tom O'Brien Show to take us home from 3 to 5. Have a great Wednesday, folks. Look forward to seeing you mañana. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.